What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 3 dividend stocks I'm watching. I'm not buying them. I'm just keeping a close eye on them. So let me know if you think these guys are good dividend stocks, solid dividend stocks, or you won't touch them. Let me know if you own them. And if you have a counter offer for some dividend stocks to closely watch, post below in the comment section. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these stocks out right now. The first dividend stock I'm going to look at and closely watch, I did sell these guys for a profit years ago, is Newell Brands. It has a dividend yield of 6.75%, a PE ratio of 10.16, average volume 4.91 million. Market cap is $5.63 billion US dollars. G range is 1225 to 2645. Stay range is 1321 to 1368. And its previous close is 1344. So what do I like about these guys and why am I watching them? Let's check that out. These guys have some popular brands out there. So obviously writing Sharpie, Expo for markers. We do that as nurses. Writing on the boards over there. Elmer's Glue, Crazy Glue. So Papermate. Food, they're a little bit diversified. They have Rubbermaid, so they have a lot of their products. I actually use some of their products. This one's a really big one, and Food Saver is another one that I see in the stores. Fragrance, Yankee Candle, that's another one. Right here, Rubbermaid, again for commercial. These Rubbermaid products are beautiful with food storage. And here's some baby products right here, but the real big thing I think is really interesting with these guys are these ones. Pullman for outdoor and Contigo. I actually have a mug for those guys, and I didn't even realize that these guys acquired these guys and own them. So, and here's some other home appliances: Crock-Pot, Sunbeam, Oster, and Mr. Coffee. Now let's check out their revenue. And here's their revenue. It's in millions US dollars. 2015, 5,915. 2016, 9,181. 2017, 11,170. 2018, 10,154. 2019, 9,715. 2020, 9,385. And then 2021, 10,589. So that's a huge increase from 2015 to 2021. Now let's check out their dividend history. Looking at their dividend history, 2014 it was 15 cents to 17 cents. Then 2015, it was 19 cents to 2017. Then in 2017 on, it was 23 cents. So I'm going to closely watch these guys to see if they have any dividend hikes in the future. Payout ratio is 49%. Number of dividend increases in the last 5 years is 0. Dividend growth in 5 years is 0. Dividend yield is 6.85%, and it's sitting at 0.92 or 92 cents if you bought 1 share. So I'm going to keep a close eye on these guys and see if they have any dividend hikes in the future. Let's check out the next dividend stock. Next is Citigroup. It's sitting at 45.77. It has a dividend yield of 4.46%, a PE ratio of 6.27, average volume 16.90 million. Market cap is 88.65 billion US dollars. Year range is 40.01 to 69.11. Its day range is 44.36 to 45.80. And its previous close is 44.87. Now these guys are a bank stock. They're a big bank stock. So this is what has me attracted to these guys. Now let's check out their revenue and dividend history. So here's what has me keeping a close eye on them. Definitely how they're doing revenue-wise. 2015, 88,275. This is in millions of US dollars. 2016, 83,000. 2017, 88,000. Then 2018, 97,000. 2019, 103. Pandemic hit. 2020, 88,000. Then 2021, 79,000. So there is a little bit of a decrease in revenue. So I'm going to keep a close eye on these guys. And their dividend history also correlates with their revenue. Let's check that out. Let's start with their dividend history. Let's go in 2015, it was 5 cents. 2016, it was 16 cents. 2017, it was 32 cents. 2018, it was 45 cents. And then 2019 on, it was 51 cents. So I don't see a dividend hike yet. And that's the one thing that kind of turns me off. But I'm going to keep a close eye on these guys. They have a payout ratio of 26%. Number of dividend increases in the last 5 years is 2. Dividend growth in 5 years is 9.04%. So if you bought 1 share, you made 204. with a 4.55% dividend yield. So that's the one thing that kind of irks me is their revenue, because when I'm buying KeyBank or Regions Financial or Huntington Bank shares, I'm seeing dividend hikes. I see revenue increases. Something's going on there. I haven't done that much digging, but once I see a dividend hike, I'm going to do a little bit more digging into these guys and then maybe pull the trigger on them. So again, this is not financial advice for entertainment purposes, only disclaimer in the description. I do not own any of these shares. I'm just closely watching them. Now let's look at the final dividend stock. And the final dividend stock I'm closely watching is NEWTEK Business Services Corp, NEWT. This is a business development company that is acquiring a bank. So they probably will not be a business development company. They have a high dividend yield percent at 15.24%, a PE ratio of 8.10, average volume 159.66K. Market cap is 448.68 million US dollars. Year range is 14.75 to 31.49. Its day range is $18 to 18.58, and its previous close is 18.10. So let's check these guys out real quick. These guys do business lending. They manage cloud solutions. They do IT security and compliance. They do payment processing. They do HR, payroll, and benefit solutions. They do insurance coverage. They do cloud desktop solutions, and they do disaster recovery solutions. So they have a lot of things that they bring to the table. There's a few other things I'm going to go over. The NEWTEK Business Services Corp did receive the Office of Comptroller of Currencies nod to acquire National Bank of New York City. The $20 million all cash deal, is expected to close in January. They received the green light from the Federal Reserve last month. So this transaction will give the banking charter the third largest lender in Small Business Administration 7A program and give NEWTEK access to NBNYC, or National Bank of New York City's $200 million in assets. So what does that mean? First, we'll go over the revenue, and then we'll go over the dividend history. So we'll check that out. And here's the revenue in millions US dollars. They are coming off strong. 2015, it was 26, 2016, 30, 2017, 38, 2018, 49, 2019, 59, 2020, 92, and then 2021, 108. So there is a huge increase in revenue for these guys, which makes them very attractive. Now let's go over their dividend history. Let's start in 2017. It was 40 cents to 44 cents, and it hit 40 cents. Then 2018, 42 cents to 48 cents, 50 cents to 40, and then 2019, 46, 58, then 71. Then 44 cents, 56, 58, 47, and then 50, and then 70, and 90, and then 12/30, 2021, 105, and then 65, and 70, and then 65, 75, 65, and 70. You say that 10 times fast. So the payout ratio is 95%. They are technically a business development company. You can correct me if I'm wrong. Number of dividend increases in the last 5 years is 14. The dividend growth in 5 years is 14.58%. You bought one share, you made 260 with a 14.36% dividend yield. So things will change once this acquisition comes in. They're technically, and you can correct me if I'm wrong, they will technically not be a business development company. So 90% of their earnings do not have to come back to investors like a real estate investment trust or business development company. So I'm going to keep a close eye on these guys. After the acquisition, maybe after the first dividend, I may pull the trigger on these guys. I really like their business model. I think there's a lot of potential with these guys, and I think the sky's the limit with them. Again, this is not financial advice for entertainment purposes, only disclaimer in the description. But these are 3 dividend stocks on my watch list right now. So let me know what you think of these 3 dividend stocks. Which one do you like best out of them? I find them very interesting as well. Very surprised about Newell Brands. So give me 3 dividend stocks that you want me to review in the future. I promised you I will do reviews on a lot of dividend stocks. Some of the closed-ended funds, I don't know yet. So, but definitely individual dividend stocks. So I will have a video for you guys tomorrow. And you guys take care and have a great Monday.